Hi, I'm Viram from Vested, and in this video, we will take a look at ETF investing strategies for beginners. If you are a beginner, you may not have the expertise to pick individual stocks, so it makes sense to try and start with an ETF only portfolio. But before we get going, let's answer the question, what is an ETF? An ETF, or an exchange traded fund, is a collection of many stocks or bonds that are traded under one fund, very similar to mutual funds. However, unlike mutual funds, ETFs are traded on the US stock exchanges with real-time pricing. So you can buy and sell them real-time. Now, let's look at 4 ETF strategies that you could look at when you're getting started. The first strategy that we will discuss is called dollar cost averaging, which you might know as SIPs. In this, you buy assets worth a fixed amount of dollars regularly, irrespective of the price of the asset. When you are a beginner, you should try and save a regular amount in an ETF or a group of ETFs, doesn't need to be just one. Try and save it regularly every month or every week, even if it's a small amount. This helps you build discipline in your saving process so that you don't time the market. The idea is not to time the market, but in fact, spend the time in the market. The next strategy is asset allocation. What asset allocation means, it's a fancy term, but what it means is that you should not put all your money in a single asset category. Asset categories are equities, bonds, gold, etc. Instead, you should spread it across different asset classes. So you could look at some investments in stocks, bonds, commodities, etc. ETFs are ideal to achieve your asset allocation goals because they help beginners implement a basic strategy very easily. Your asset allocation should be based on your risk profile. How much risk can you take in terms of your investments? So for example, if you're in your 20s, equity ETFs or stock ETFs may form a majority of your portfolio since you have time on your hands. With age and depending on your goals, you may decide to adopt a less aggressive strategy by increasing the proportion of your investments in bond ETFs versus, say, equity ETFs. Alright, the third strategy that we're going to look at is that ETFs allow you to get exposure to a sector which would otherwise have been very difficult to invest in. For example, if you want to get exposure to the technology and robotics sector in the US, you can look at an ETF called the ARC Autonomous Technology and Robotics ETF. Or if you want to invest in clean energy, you believe that renewable energy is the future, then you can look at an ETF called the ALPS Clean Energy ETF. ETFs also allow you to execute a sector rotation strategy where you can book profits from one ETF and then choose to move to another ETF depending on the economic cycle. This is particularly helpful in cyclical industries that basically have boom and bust cycles. Alright, the last strategy that we're going to be looking at is that ETFs allow you to diversify in the global markets beyond just investing in the US market specifically. For example, the Invesco China Technology ETF tracks the prices of the FTSE China Technology Index and gives you exposure to companies like Tencent or Baidu. These are huge technology companies that are built out of China. Another ETF is the iShares MSCI Japan ETF, which tracks an index comprising of Japanese stocks, and some of its holdings include the likes of Toyota or Sony. So combining the US and international ETFs, it helps you create a truly global portfolio. Alright, so today we looked at 4 ETF investing strategies for you to get started in the US markets. So that's it for now. Stay tuned for more.
Thanks for watching. If you like our content, subscribe to our channel and hit the bell icon to get regular updates.